what we're going to talk about today is basically what is the outlook for the market, how the market has been in the last week, and questions that many of you guys have been asking, because it is getting very close to the tops right now, and so it's very relevant to ask questions. So this is session number 28 in our learning sessions, and so I want to welcome you guys. Thank you for being on the call. In case you have questions, please put it up on the chat. We will definitely take them up at the end of the session. In case you're watching this video later on the YouTube channel, please do leave your questions as comments on the video itself, or you can always watch them. Okay. So let me just quickly look at monthly performance. So far, we have this in the last month or so. We've stayed invested, or we've invested in about 37 shares, okay, out of which 30 of them are doing really well right now. And if you had done some sort of a trading based on this, you would notice that, okay, I'm just going to mute everybody. Yeah, if you've done some trading based on this, you would notice that you would have probably seen a return about 10%. Okay, that's a very good return in the last 1 month or so, considering the fact that we also had a time when the markets fell by 1,000 points. Okay, so if you look at this, Adani Ports was bought before the fall. Apollo Hospital was bought before the fall. Okay, and in the same time while the market was falling, Apollo Hospital went up 1,640 to 2,277. Of course, then when the market rebounded, it gathered even more good strength. But when the markets were falling, Apollo Hospital was still going up. Okay, Ashok Leyland is a long-term purchase that we made about 3 months back, 4 months back. Still doing good. You will see that in spite of when the market was falling, some of these shares did well, and even as the market is going up, some of them have not done well. But some shares have really outperformed. Okay, and some of it's actually also a lot on when you pick it up. It's also very helpful when you pick up the share. For example, HDFC, and I'll show you this later. I picked it up at 1,030. That was practically the bottom for HDFC, and today it's at 1,231 or 33. Amazing, 200 points, or almost 20% increase in one of the biggest shares in the market. By the way, HDFC is the second most heaviest stock on the index, which means after Reliance, HDFC Bank is the most heaviest. And if HDFC Bank moves really well, which it has been doing the last few days, that is one of the biggest reasons why the Bank Nifty and the Nifty have been going up a lot. Okay. All right. Along the route, there are times when we exit. There are times when we've averaged. I've averaged L&T. I've averaged MGL. I've averaged Adani Ports. So I actually initially bought Adani Ports at 370, and I averaged it somewhere at 325. That's how I got a rough average price of 345 now. L&T was amazing, 920, and then at 840, 850, I averaged again. So that's how I got 880. And that's, so a lot of this, I haven't, one of these shares that really went down during this entire fall was iBull's Housing Finance. I actually haven't averaged it. I probably should have, because it went down to 125. If I'd averaged at 125-ish, we would probably be making a profit right about now, a little above this level. Now, some of the shares that we bought recently, BEPL, Bansali, it has gone from 72-ish to 97. I sold some at 99, and I've kept a stop loss about 94, 93 if it comes down. But if it keeps going up, I'll continue to stay in that share. We've also bought GRSA. GRSA is Garden Reach, and jump 180, 270. Amazing jump, 20% in just a few days. Okay, so that is on the cash side. Of course, most of my investments, as you know, are on the F&O side, on the futures and options side. So just for you guys to know, September 24th, Nifty was at 10,780. On Friday, it closed at 11,915. Wow. And so that is almost an increase of 10.5%. So if you can look at this, overall, our investments have kind of matched the Nifty. Okay. And now here's the thing: on the FNO side, my profit is only at 5.17%. And a lot of people ask, hey, why are you not performing as well as the Nifty? It's simply because we hedged it. And this last 7 days or 8-9 days, when the Nifty has gone up so much, it was hard to keep in pace because of the hedges. But here's the thing: if these prices hold to the end of this month, whether it's the share prices, especially the underlying share prices, my profit can reach 15.5%. Okay, let me show this. So invested about 49 lakhs on the FNO side. This is what it looks like right now, about 5.17%, 2.53 lakhs return. Not bad return on in a month. 5% return in a month is really good, by the way. But it also depends on hedging. Because I've hedged it so quite well, you will see that at the end of the month, if the share prices remain the same position will yield me 15.5%. Now, why is this very important? It's simply because I will explain as we look into the market outlook. Why is this important? Is because we are reaching a place where all the markets, the US markets, a lot of the other markets, on the European side, the Asian side, and our Indian markets are kind of at the levels they were before the pandemic. Okay, so what's the danger here? There is a danger, of course, but also we have a bullish pace right now. If you look at the last Friday or the last Thursday, October 1st, we were sitting at 11,500. So in 5 days, sorry, this is October 6th, if I'm not mistaken, 5th, October 5th, we were sitting at 11,500. In 4 days, 11,500, we've come to all the way to 11,938. So that is 420 points every day. The index has been jumping an average of 100 points. Okay, that's a lot of points, okay, going up. You can see that August 31st, 11,800, that was the resistance point. It has cleared that with ease in the last 2 days. Okay. By the way, the US markets have closed at a positive on Friday night, which means Monday we will probably see testing 12,000. Just so you know, you'll probably see the Nifty testing 12,000 on Monday, probably. Same thing in the Bank Nifty. The Bank Nifty, August 24th, September 24th, it was at 20,400. August 31st, it was 25,200. From there, it came down to 20,400. October 6th, it was at 22,370. And look at this, it's gone back up almost to 24,000 in just 4 days. Okay, so from 20,400 on September 24th, in about 9 trading days, it's gone to 24,000. So huge jump. And most of this jump has been fueled by banks like HDFC Bank, HDFC, the Housing Development Board itself, the housing finance part of the company organization, used to have really moved. And ICICI Bank. ICICI Bank has gone from almost 330, 340 to 400. Huge jumps. Okay. And if you had invested in any of these, you would have seen a return. HDFC went from 1,600 something, 50 to almost 2,050. Okay. 20% increase. HDFC Bank went from 1,030 to 2,030, 1,230, 20% increase. ICICI Bank 330 to 400, again almost 20% increase. All three of them have performed really well, and because they are really heavy on the index and the Bank Nifty have moved up so much. Now, why is this a crucial phase? It's simply because the markets are at a high. Now, from going forward, we might see a lot of consolidation. It's not because you've seen the markets have moved so fast. The likelihood is that there's going to be a bit of a consolidation. This week, we might see a bit of that. Okay, the jumps or the movement upward will become slower and more static, especially as we test higher levels, 12,000, 12,400. Those two are very crucial levels. As we test them, they become harder. And so that's going to affect. Then any news can affect. You saw one day the president of the US said, no stimulus, and the US markets crashed a bit. And then the next day he said, yes, there is stimulus, and then it went up a bit. So it's crazy. The RBI policy came out on Friday, and the banks moved up a lot. Monday is probably when they're going to release the moratorium case results, probably, if they don't postpone it again. And so then again, there can be a dip in the banks or a movement up in the banks. So it's all there. Okay. The government just recently just said in the last few hours that all the stimulus that they could give, the Indian government, all the stimulus we could give has already been given. We don't have money to spend, and so we'll have to work with this on the banks. There is no free money for everybody, and so maybe the banks might correct on Monday. We got to see. So all of this is telling me that there is going to be consolidation. Now, when consolidation happens, what you will notice is it's not so easy to pick up a share and just go, hey, it's going up. Okay, we used to do that. Remember in March and April we would buy something, say the Tata Motors 65. Today it's at 140. Bang, we made 100% return in 4 or 5 months. Great. Or Reliance, you bought it at 800 in March. I know a person who bought it at 800. 800 in March, and today it's at 2,200, and wow, 200 times return or 200% return. Great, but that's not going to happen. You've got to be very careful on picking the right share at the right price at the right time. Okay? And so we've got to be very patient. And sometimes the markets will go down. If you've seen the market trend over the last few years, you will see there are dips and crests and troughs. So there are times when it's going to form tops. There are times when it's going to go down. And we got to be able to generate income during both these phases, the bullish phase and the bearish phase. And one of the ways we can do that is through the KWC partnership. If you remember, in August, when the market fell down by 8.5%, we still generated a return of 2.5%. Just like I explained right now, just before, even as the market has gone up 10.5%, you're looking at a potential return of 15.5%, which is really good, by the way. Okay. And so that is how, whether the markets are going up, whether the markets are going down, it is possible to make money, but you got to be very smart about it. It's not just easy. It's not like, close your eyes and put your money in a share and you're going to get, a good return. That's not the way it's going to be in the coming days. And so for people who, and by the way, I know a lot of people, it's very stressful sometimes for them to watch the investments. It's up one day, down another day, what to do. And I get always questions like that. What do we do? Should we exit? Should we enter? And so that's the norm that we're going to face in the next few months. And my suggestion is, look to invest where you can be assured of a good return. Okay. And that's especially for people who want to invest with KWC. It's a very good place to ensure a good return, no matter what the market does. Okay. So here's the thought about why this works. Okay. You need the entry level is a minimum of 1 lakh. Okay. But you will get a 12% return for sure. You've seen the last 4 or 5 months, ever since I started FNO hedging, we've seen that even when the markets are down, we still make a return. Even when the markets go up, we make a return. And this is 12% is amazing return in a range bound market. When your market is down and it goes up a lot, you can expect easily 5 to 10% in a month. But what happens when the market is in a range bound situation? What happens when the market is going down? And then it's not that easy to make money, right? So that 12% is a huge amount. Okay. And so the plus side of this is the lack of stress. You don't have to worry about the market is going up, market is going down. There's no stress. There's no fees, no loading fees, no transaction fees, no early exit fees. You want to get out after a month, you can, no problem. But I think one more thing is that you get the advisory for free as well. So if you are interested, this is something that is really helpful for anybody who's interested. You not only get a return, you get advice for free, all of that, and without any stress. Okay. Now let's look at some stocks that have done really well this week. Okay. First one, I want to pick on TCS. TCS, if you remember, we picked it up at about 2,300 something, and today it is at 2,800. So that's a huge return, about 22% return on TCS. And now TCS is a huge heavyweight of the index. And again, one of the reasons why the Nifty moved up so much is because of the banks and the IT sector, and TCS was a huge part of this. 22% in about 9 trading days. Okay, and we had participated in that. Another one, HDFC Bank. Now, this is my favorite stock as of now. Now, why did I enter HDFC Bank? You can see here, I entered at this bottom, 1,030. But, people could have still entered at about 1,050 when there was, you can see the breakout there. And then from 1,050, you could have easily made 180 rupees on a single share. If you had bought 10 shares of HDFC at 1,030 or 1,050 even, you could have made anywhere between 1,800 to 2,000 rupees just for that. And almost a 20% return on HDFC. Another one, Garden Reach. Okay, Garden Reach, if you look here, you can see there was a trend line here that it broke at about 1,080. That's when we entered. 1,080 to 2017. Now it's in a bit of consolidation. By the way, Mazgon Docs is listing on the index, listing on the NSE tomorrow on Monday. And if it lists well, I can expect Garden Reach and maybe Cochin Shipping also to go up a little more. Okay, that's another reason why I'm holding on to the share. But you can see how that's also done 20%. So there's been a lot of potential, returns that you could have made if you entered in properly. Okay, and so let me just quickly answer some of these questions that people have. How do you pick stocks for short-term trades? Well, basically, I look for good fundamental stocks. I look for a bounce back or a breaking of a trend line. I look at the indicators, MACD, EMA, and stochastic. That's when I decide to enter. So you got to plan out what are these shares that have gone down? Are they fundamentally strong stocks? And then I set, alerts for all of them. And that's how HDFC Bank, TCS, Garden Reach, Asian Paints, a lot of shares that we've bought over the LNT, a lot of shares that we've bought over the last few days, or a few weeks. And actually, that's what I've been doing, from the time I got back into the stock market. That's what I've been doing, pick good fundamental shares, look for the indicators, whether they're bouncing off or breaking a trend line, and then enter. Okay. And then have stop losses. If your stop loss hits, please exit. Unless you're willing to hold it and then maybe average it at the bottom. But I'm telling you, most people don't put stop losses. You really need to learn how to put stop losses. Now, because one of the questions that is allied to this question was, how do you decide what is the stop loss? Or again, the question, how do you determine a target or a stop loss for a trade? Well, for intraday trading, I normally keep a 1% stop loss and a 1% or 2% target. But what about a short-term listing? Well, for short-term trades, I look for resistance and supports. So if for example, BEPL that I was pointing out earlier, we bought BEPL at about 72. Sorry, Shalby. We bought Shalby at about 90. And the target, it's already reached 99, 96. But our stop loss is at 83. Why? Because there is a support at 83, 50, 84. If it breaks that support, it could go down further. And that's why my stop loss is below the support. So how do I determine supports? How do I determine stop losses? Below the supports. Okay, that's one way. How do I determine a target? Well, every share based on its historical movements and based on, now a lot of times round numbers actually are resistances as well. So for example, BEPL, I said, the target is 99-ish or 94-ish. Why? Because those are round 9,500 are round numbers, and a lot of resistance can happen at that time. I've noticed HDFC Bank, when it was going up at 1,200, a lot of resistance. There were almost 2.5 lakh shares waiting to be sold at 1,200. The fact that HDFC Bank took out 1,200 is a different story, but 2.5 lakh shares were waiting to be sold at 1,200. Why? What basically it means is, because it's a round number, a lot of people put a lot of shares up for sale because they want to book their profits. And so many times, how you determine a target is simply based on what the resistance are. Okay, so we study those. We study what are the historical resistances. Where has the share bounced off before, and determine based on that we would determine target. Now, so that was the third question there. Where would I set a stop loss? Like I said, put it below support. Uh, if I've seen HDFC Bank, when I bought it at 1030, and I mentioned it to others as well, my stop loss was below 1000. Why? Because the last time HDFC Bank went down, it went to 1003, and it was in that 1003, 1005, 1006 range for a long time. And then I bought it at 1030. It went to 1120, and then when the August 30th crash, 31st crash, 30th crash happened, it went from 1120, it came to 1030. Okay, so 1030, when I entered, I knew my stop loss has to be below 1000. So 998 or 999 was my stop loss. Why? Because historically 1003 was where HDFC Bank found support. So I put my stop loss below the support. My target was 1120, and so my initial price or my hedging was all done at 1120. Now the fact is HDFC Bank has outperformed all our expectations. It's gone up 20%. That's a different story. But my initial target was 1030, 1120. You see that? Based off historical evidence, and my stop loss was at 1000. So where will I set my stop loss? Below the supports. Where would I put the target? Just below the resistance. That's an easy way to think about it. Okay. Now, if you have any follow-up questions, I can answer them right now. But if you have any doubts at any time, just WhatsApp me on 9495974264. Please remember to subscribe to the YouTube channel and get your friends and families to also follow. I'm sure this is been helpful to you over the last months that you've been part of this journey. I know it's been helpful to almost 100 people, 100 plus people all over the globe who've been part of this journey with us. And I want you to know that investment is something that can be made easy. You just need good advice, especially at a time now that the markets are in a good range where there's going to be consolidation. We should be able to learn how to pick the right shares, pick them at the right time, at the right price, and then profit book them at the correct time, right place. Okay, so those are my thoughts. If you have any questions, we'll take up those questions now. Let me just look at what the questions are in the chat. Okay, someone asked, you've been holding Ashok Leyland for a long time. How would you decide what is the best time to exit? For me, the short-term target has been 80. It actually hit 80 before, so I definitely see it reaching 80 again. But the long-term target for Ashok Leyland is anywhere between 150 to 200. Okay. Historically, it can go back to those levels. And so I'm still holding. I have booked out a lot of profit in between. Every time, see, I had initially about 700 shares of Ashok Leyland, and I've profited out, booked out from time to time. I've entered again when it's gone down, so I do that all the time. Okay. Now, the banks have moved a lot. How would this moratorium news? So the moratorium news for now is slightly positive, but like we just heard today morning that the government was telling the Supreme Court that there's probably not going to be a fresh stimulus. I don't know how that's going to affect the market and in what way, because the markets are on a high right now. They probably, and also the global cues are positive. So even if India cannot provide a stimulus, by the way, India never actually provided a good stimulus to the economy. It's been a good stimulus in US. It's been a good stimulus in Europe. It's been good stimulus in other countries. And that liquidity has flowed back into India. If you notice, every time the US has announced a stimulus package, the DIIs, the domestic institutional investors in India, have only sold off shares, but the foreign investors would bring that money from the US and buy in India. Okay. So yeah, even if we don't get a stimulus here in India, because you have stimuluses going to happen in the US and things like that, our market should be okay. In terms of the moratorium, it depends on what clarity the Supreme Court gets and the ruling. We got to wait for that ruling to make that decision. We can't say, without knowing what the decision is, how can we decide what the market will do? What is a range-bound market? Basically, a market that has a stiff resistance and a stiff support, and so it's yo-yoing between these two levels. Okay, and that happens a lot. I've seen months where the market literally was consolidating. Okay, it was in a range, neither going up, neither was breaking down. I've seen days sometimes when it's consolidating, when all the shares are range-bound. So basically, a range-bound market is when the market is between two levels and not moving much. Okay. All right. So any other questions that you guys might have, I'm more than willing to take them up right now. If not, you can always ask me questions later and I will follow up on them. All right. Anything you guys would like to ask, I'll just unmute you guys. Anything you want to ask me? Uh, okay, so one of the questions was, why did I decide on buying? Okay, Coal India, ITC, what are the challenges? Okay, so just for you guys to know, Coal India and ITC have been the two shares that have really underperformed for us. And I've actually been waiting for a time and I can see that they're going to make a move back and then average them. That's the key. So I haven't seen that yet. If I do see it, I will let you know as well, but I'm definitely looking for a place where I can average them. I've done that with Adani Ports. I've done that with L&T, and both of them have done really well for me. I've also done that with MGL. MGL is struggling still a bit, but that's the basic thought. Okay. Now here's the key thing. Ideally, if you buy something and if it's a stop loss, get out. That's whether it's intraday or short term, doesn't matter. That's the easiest thing we can do. Of course, a lot of people don't want to do that. Sometimes they weren't able to sell when the markets were crashing or going down. And I can totally understand that. So what do we do? Then we got to be careful. We don't want to lose the capital that was invested. If we have invested in good, fundamentally good or strong stocks, you need to understand eventually they will come back up. Okay. And so the key is to average them at the right time. And there's a trend going back up again, average them. So that's my answer to those two stocks. They haven't done all that well, but we've seen in L&T, in Hindustan Lever, if you had averaged well, you would have made a lot of money. Okay. Hindustan Lever, 2,150 was when I bought it. It went to 2,000 when I averaged it, and so my average price came to 2,060 or so. Today it's at 2,130 or 2,140. You can see how averaging made a lot of sense there. Let's see, another question. Any other questions? Okay, so no other questions there. So if you have any questions at any time, please feel free to ask me. I'm more than willing to help you and guide you and lead you in this journey. Please note that the markets are at a high. Okay, and it is important that we hedge or protect our investments. And I want you to know, in my F&O investments, I have 3-4 hedges running on every share. That's the level of hedging that I've done. If for any reason the market is going to consolidate, then that hedging makes a lot of sense. If the markets are going to profit book a lot, also some global cues or some issues coming up, again hedging will help us a lot. And so and finally, 12,400, 12,500, that's the range that we've seen the market being in before the pandemic, and we're entering that range now. So we can expect to see a lot of consolidation. If we can break out about 12,430, which is the all-time high of the Nifty, we can. Okay, see, I want you to know something. Here's the funny part. The bank Nifty was at about 32,000 when the Nifty was at 12,430. Just Today, the Nifty is at 11,900 and the Bank Nifty is only at 24,000. Now, imagine, just imagine, that's a difference of 8,000 points. Do you know if the Bank Nifty goes up 8,000 points, if the Bank Nifty goes up 8,000 points, the Nifty will go up by 2,600 points. Now add that 11,900 and 2,600 is 14,500. So if the Bank Nifty actually goes to 32,000, then the index is looking at 14,500. Do I think it's going to be likely? No, because we also have to measure and see. By the way, we've come back here because not because the economy is doing really well, but people have calculated, hey, this was what the economy was at before the pandemic, and eventually we'll come back to that level sooner or later, maybe in a year or so. That's how the people in the stock market have evaluated and started buying accordingly. But would the economy go better than what it was before the pandemic? I don't think so. Personally, I don't think so. Because of that, I don't see how the stock market can justify going to 13,000 and 14,000 and 15,000. It can go, maybe in another 4-5 years, maybe even in 2 or 3 years. But I don't see it making sense for it to say, you know what, we're going to 15,000 or 14,000 now. Doesn't make sense. Okay, but it makes sense to come back to 12,500, and that's what this journey has been. In January, 12,430. In March, it was 7,500, and now we're back almost at 12,000. It's been a great journey so far. I hope you've been blessed. Have a great Sunday ahead, and we will see you on Monday. Till then, take care, have fun, God bless.